A 90-year-old investment insight that's relevant in 2020. I'm Bob Stokes with Elliott Wave International. Many of you know that Ralph Nelson Elliott discovered the method of forecasting the markets that today we call Elliott Wave analysis, or more formally, the Elliott Wave principle. R.N. Elliott lived from 1871 to 1948, and July 28th was his birthday. So we decided to pay tribute by mentioning one of the key observations he made during his years of studying the stock market. As the wave principle forecasts the different phases or segments of a cycle, the experienced student will find that current news or happenings, or even decrees or acts of government, seem to have but little effect, if any, upon the course of the cycle. It is true that sometimes unexpected news or sudden events, particularly those of a highly emotional nature, may extend or curtail the length of travel between corrections, but the number of waves remains constant. What this means simply is what our subscribers have known for decades. News and events don't affect or create broad market trends. Of course, this seems to defy logic because most people believe that news and events are the very things that drive the stock market. Yet there was also a time when most people believed that only birds could fly. But what governs airplane flight, the buoyancy of metal ships, the light produced by an incandescent light bulb, radio transmission over the air, and yes, the wave principle of price formation in the financial markets is natural law. Natural law is inherent in price patterns of stocks and other markets. Those are the patterns of the market participants' collective psychology, the true driver of price trends. That's why outside events do not materially influence the pattern's behavior. In fact, often the stock market behaves in a completely opposite manner from what the majority of market observers would expect from the news. Here's a chart and commentary from our July Elliott Wave theorist. This figure is updated from the June issue and shows that on Sunday, July 12th, Florida reported the largest tally from any state of new COVID cases since the pandemic began. Did the stock market care? No, it gapped up the following morning. This morning, Friday, July 17th, Bloomberg reported that profit at the consumer banking unit of Bank of America has plunged 98%, and overall profit at the bank is down by more than half. The U.S. banking system is in serious trouble. Does the stock market care? No, it gapped up on the day. In the nearly 90 years since R.N. Elliott observed that news does not alter the market's wave pattern, his insight has been proven time and again. So it's wise to keep your market eye on what really matters, the wave principle of human psychology. Our team of Elliott Wave experts can help you do just that. Learn what they see just ahead for stocks, bonds, gold, silver, the U.S. dollar, and more by taking advantage of our 30-day risk-free trial. Follow the link below this video to get started.